Carry forward refers to the ability to go back and use unused pension allowances from the previous 3 tax years to make contributions into a pension in the current tax year. It's a way of putting a larger contribution into your pension in 1 year than you would be able to by just using the one annual allowance of £40,000 currently in this tax year. Now, in order to use carry forward, you must have been a member of a UK registered pension scheme in the years that you're looking to carry forward the unused allowance from. In terms of how it works, well, firstly, you've got to use this year's annual allowance, which, as I've just mentioned, is £40,000. So using carry forward is only relevant if you're looking to contribute to a pension from all sources in one tax year, so employee and employer potentially. You're looking to contribute more than £40,000. If you want to contribute more than £40,000, you can do so if you have unused allowances from the previous 3 tax years. So, for example, if in the 3 tax years leading up to the current tax year, you had total pension contributions of, say, £10,000 per annum, that would mean that you have unused allowances available to carry forward of £30,000 per annum in the 3 previous tax years. This would mean for you in the current tax year, you would have £40,000 that you could contribute this tax year using this year's annual allowance, then potentially another £90,000 that you can carry forward, giving you a total contribution of up to £130,000 in the current tax year, which could attract tax relief. Now, in order to use the carried forward allowances, what we must first do is use up the current tax year. And then when that £40,000 has been maximised, we go back to the oldest year first. So working back from the current tax year, which is 2021-22, we've got 2020-21, 19-20, and then 18-19. So we need to go back to 18-19 first and use that allowance up. So if we had £30,000 left, we would maximise that year's allowance by using up the £30,000 which is remaining. If you then wanted to contribute more money still, you would move on a tax year and you would maximise the next tax year's allowances until all that was used up, and then you would move on to only last tax year and fill that £40,000 allowance up as well. Now, the older tax years, as they become more than 3 years old, they will actually kind of drop off the end of the conveyor belt. So if you don't use the oldest tax year's allowance up, by the time we move on to a new tax year, that one will have gone, because we can't go back more than 3 years. So it's important to make sure that if you do want to use carry forward and you're wanting to go back and use an allowance which is from the 3 tax years prior, that you do so before the end of the current tax year, before you lose the opportunity to use the oldest one, because we're into a new tax year and the conveyor belt has moved along. Another restriction is that you have to either have taxable earnings which will cover the full amount of the contribution you're looking to make. So in this example, you'd have to have earned at least £130,000, or make the contribution by means of an employer contribution. So in terms of who this might commonly work for, firstly, employees that have seen a big spike in earnings. So for example, if somebody had earned a salary of, say, £50,000 per annum, and then they get a big bonus, and they don't need all of that big bonus, and they've got a spike in taxable earnings that tax year, they could go back and carry forward some of their previously unused pension allowances, covering it with their taxable earnings in the current tax year, because they received that big bonus. Another example of people who would commonly use carry forward might be people who own their own company, because they can control their remuneration, and under the advice and guidance of their accountant, it may be decided that it is sensible for the company to make a contribution of, for example, £130,000, as we've just been discussing, and it would then be made as an employer contribution, not an individual contribution, and it wouldn't need to be covered by earned income of that amount, because it's coming from the company and the company is going to receive the tax relief. So in terms of the maximum that you can put into your pension using carry forward, well, in total, the one-off lump sum would be, under current legislation, £160,000. How do we get that figure? It's £40,000 from this tax year, and then it's 40, 80, 120,000 from the 3 tax years prior as well. So 40,000 this tax year plus 3 lots of 40,000 from the previous 3 years, making a total of 160,000 that could be contributed. But remember, it must either be made from the employing company, which would need to meet the wholly and exclusively for business purposes tests, or it would need to be covered by taxable earnings, which are at least the amount of the contribution that's being made.